welcome to this special pre-budget event, the Budget Bet. I'm Abha Bakaya. This is the show where we help investors make informed decisions by providing in-depth analysis of the three pillars: business, economy, and trading. We've got a power-packed lineup of the most influential market voices. Our guest editor today, Madhusudan Kela, the Chief Investment Strategist at Reliance Capital. Madhu, thanks so much for coming in today. And also joining us on our special market conclave is none other than Ramdeo Agarwal, the Joint MD of Motilal Oswal Financial Services. Mr. Agarwal, great to have you with us.
Thank you.
This is going to be an exciting conversation between two brilliant minds, in fact, who are going to be sharing their experience here today with a whole lot of you that are wondering how to tackle markets in these difficult times and how to make the right decisions. Remember, we are looking at a long-term wealth creation strategy. In the immediate term, Madhu, I think all of us realize that things are looking a little difficult to predict for anyone.
Sure. Thanks, Abha. Thank you very much, Mr. Agarwal, for joining this morning. Let me start by saying that, the kind of markets which we are living in today, which has been extremely turbulent to say the least, there is humongous volatility, and somehow the investors who have put in money for last 1.5 years are kind of losing faith. They are questioning whether was it a right decision and is it a right decision for them to continue to put money in equities. So what is your key message in the sense from the government side? How do you create a counter force in this market? How do you give confidence to retail investors to come in? And what is it which the government needs to do in the coming budget to communicate that message?
Yeah. So let's, we have talked about the market in so many forums, and, in any case, we have very little understanding of what can happen in the markets in a very short term.
That's right.
Okay, but some of the forces which you can see, you open the papers today, shipping index, Baltic Freight Index has moved from 12,000 in 2007-8 peak to 290.
Sure.
98% correction.
Sure.
Look at oil, has corrected from 110 to 30 or is struggling.
Sure.
Okay. So the pace of adjustments which are happening are crazy.
That's right.
Even if you look at the dollar movement, dollar is strengthening, and rest of the countries, the way they have, whether it is Brazil, South Africa, currency after currency, country after country.
Yeah.
So, and India, luckily, thanks to whatever policies we have pursued in the last 1 or 2 years, is an island of stability, relative stability, I would say.
No, that's
okay.
Right.
Now, as far as the stock market is concerned, it's a very, another, if currency is to be stable, like that, stock market also needs to be stable, because FIs and domestics have a very large stake in this.
Yeah.
And it is...
Not yet, but they should have a large stake.
They have, whatever, they have about 18-20% of the market with them.
Sure.
So, what I'm saying is that in last 3-4 years, when there was a policy paralysis, the country was not doing that well, still we got about $25 billion per year.
Sure.
Because of macro allocations.
That's right.
Again, not because of your own doing, but you got because of global macro allocation.
That's right.
You might see redemptions. You might, probabilistically.
We are seeing last 12, 18 months.
So that's what I'm saying. So if you have a global macro call to redeem, not because India is doing badly or that.
That's right.
For its own global call.
Yeah.
If they can come when we didn't deserve to get, they can also go when we deserve.
That's right. Yeah.
Okay.
Normally, that is how it happens.
So it has its own, a lack of funds.
Sure.
Can we create counter forces? Like steel is deluged. So we came out with a strong minimum import price for steel.
Sure.
Like that, our central bankers, they collected money in anticipation of, this thing, flight of capital from India when the rate rise happens in US. Even well before last year rate rise.
Sure.
So like that, can we create counter force against the possible FI selling?
Sure.
Yeah. Now it is a probabilistic event whether they will sell or not. I don't have any clue whether they will sell or not.
But it's happening. They're selling. Last 18 months, month after month they're selling.
What I'm saying is that till now, domestics have been investing.
That's right.
So there was a counter force.
Yeah.
But now that's also slowing down.
That's right.
So what we can do to create a permanent counter force, how do we make our equity markets attractive?
Which is what precisely I'm asking.
Yeah. So For that, this budget is an opportune time. We have been asking for. See, one other thing about capital markets in the particular stock market, stocks per se, is the how do you treat your dividend? Because ultimately, what you buy in Reliance, Telco, Tisco, 100 shares here and there, you get only dividends. You can't go and knock the office and say that I'm the Malik.
Sure.
You can only get dividend and bonuses. Okay?
That's right.
So, how do we treat dividend is very important.
Sure.
We have, because worldwide it is double taxation, we also do double taxation.
Yeah.
But we are horrible in double taxation. We charge 33% tax for the honest corporate profits, and after that, for whatever is paid out, again we charge 21, almost 20.5% dividend distribution tax.
That's right.
Okay, in the measure of simplification.
Sure.
Now that is, so what is happening is, that is stopping the companies from paying out.
Yeah.
Lots of companies, very large companies, they are sitting on hundreds of crores, I mean thousands and lakh crore kind of treasury.
Yeah.
And putting in liquid funds and things like that.
That's right.
That must be allowed to be, I mean, that the moment you bring down the dividend distribution tax to I would suggest that abolish it, but if it is not possible to abolish it, bring it down to 5-7%, very affordable levels.
Sure.
So it will cost very little to the exchequer, but it will create a massive attraction for the equity markets.
Sure.
At a very little cost.
Sure.
Okay, so that is one. Second is the taxation part of it.
Sure.
There is so much of confusion and so much of assessing officer has the discretionary power.
Sure.
That and there is so much of rate arbitrage between zero tax and 33% and 20% and those kind of things. That the person who is buying a stock today, he is not sure what will be his tax rate.
Sure.
Which he has fundamental right to have.
Yeah.
If I am buying a stock.
But they have given a lot of clarity last year that.
Still it is 80%, 70% clarity. It is not 100%. I need to be 100% clear.
Sure.
That
for the next 4 years, this is how it is going to be.
No, forever.
Yeah.
I mean, if I remain invested, I will not. Instead of 0%, please charge me 10% or 15% or 20%. But let me be very clear. I have bought it, 20% will be my tax.
Ramdevji, please don't say that because I think one of the things which is negatively being spoken, which has personally shaken me at least in this kind of sentiment that they are thinking of getting the long-term capital gains tax. The very fact that long-term capital gains were not there in this country and Mr. Chidambaram in his budget speech introduced saying that we'll do STT. So either you have to remove the STT completely if you are getting the long-term capital gains, which means you are supporting the speculative forces to come in the market rather than long-term investors.
Indian legislatures are master in creating confusion. I bet they will not do a clean job. But when STT came, they again kept it ifs and buts below that. It was not a clean 0% for long term and 20% for short term.
So two things you said. One is you said that do away or reduce the dividend distribution tax. Second, you are saying give ample clarity.
Not ample.
Yeah.
100%. Not 19.9.
Yeah, okay.
100% clarity about my tax status on capital gains.
Sure. What else?
So, no, this is too much.
The third point
is too much.
The third point is that, you know, traditionally, we have been investing a lot of money in gold. We've been investing a lot of money in real estate. Traditionally, you know. Equity is hardly penetrated to the extent of 2-3%. Let me ask you one fundamental thing is, does the government really realize, in your opinion, that equity markets are very, very important for the growth of the economy, for the growth of the corporate sector, and even for their own sake, the disinvestments which they have to do. If the markets are vibrant, as you said, you may forego 10,000, 15,000 crore rupees by way of dividend distribution tax, but the amount of disinvestment you can do and the valuation, the valuation which can come in. Do you think there is, like there was an urgency for steel sector to impose a duty, is there an urgency in the government mind to do something vis-a-vis capital market and revive the markets?
I don't think they have that kind of thing ahead of, when there is a market slumps, market slumps, then they get worried. What is happening? Because most of the bureaucrats, I mean, people in authorities, they have not invested in the market. Because of their busy life, they are not. They don't understand the complexity of the market.
Why don't you please? You have been here for 25, 30 years. There is no one better than that for you to explain on this show. Why is it that this is an emergency kind of a situation and they need to ensure that we are back to 8 to 10% GDP growth rate. We are able to create a counterforce vis-a-vis FIs. This is a brilliant opportunity for the government to move ahead and make a few changes so that you are disincentivizing people from investing into physical asset, and you are incentivizing them to invest in financial savings.
Particularly, we must create a huge arbitrage between gold investment and equity investment.
Yeah.
Because gold is just you. I mean, you're hardened. In any case, you're a poor country.
Sure.
Whatever you save about, say, in $2 trillion economy, 30% savings means you're talking about something like $500-600 billion.
That's right.
Of that, almost $40-50 billion just dies every year. Because the moment you put in gold, money is exported out.
Sure.
You put in that out of $50 billion, even $25 billion goes to traditional marriage and all. But even if that $25 billion goes to create businesses here, the amount of jobs, the prosperity it will create in the economy is not going to be funny.
Yeah.
So the issue is, how do you create uneven levels between gold attraction? I mean, gold has to be unattractive to invest.
Sure.
And equity has to be superbly...
So this is the third important point which is coming up. How do you create an uneven level for equity investments to come by so that people are disincentivized to invest in real estate and in gold and incentivized hugely
Not real
to
estate.
invest?
Real estate is good. I mean, real estate for houses, for offices, that's good. In fact, you got to make it very smooth for the construction and all those to come up. But what I'm saying is that the useless asset like gold, in fact, I mean, if I had power, I would have banned it beyond 100 grams with anybody in gold. The country should not have anybody with more than 100 grams in gold.
Sure.
See, 100 grams is required for Mangal Sutra or whatever, but beyond that, what is the use of it? You make it, I mean, you either make it gold bond or make it equity or whatever. So what I'm saying is
in a democracy, that is not possible.
That's not possible. So let's talk about, how do you make equities very, very interesting? So that some portion, significant portion of the savings, because ultimately your business will be built with your equities.
Sure.
Foreign equity will take away the business ownership.
Yeah, sure.
Okay. Yeah. So we have to empower DII more than FII.
That's right.
And today FI is more empowered than DII.
Sure.
In terms of tax treatment. So what I'm saying is that give all the preferential treatment, even at a cost, to the equity investors from India.
Sure.
Encourage all, like Stand Up India, Startup India, like that equity revolution must come.
That's right.
It's possible. We have 130, 140 years culture. And this is one of the most brilliant market in last 30 years. Market is, despite all the headaches, market is up 100 times in 30 years.
Sure.
So you can't get a more hardcore bull market than Indian market.
Do you expect the government to some way address the non-level playing field which is there for local investors vis-a-vis the foreigners? Let's say if I'm coming through Mauritius, I'm not paying any short-term capital gains tax. I'm actually not paying any kind of tax. But as a local investor, as you said, I'm level to play short-term capital gains tax.
I don't know my tax status.
So,
I mean, it's so bad.
How do you think the government can give without hurting the interest of the foreigners? Because we need, of course, the foreign money as well. Without hurting the interest, how do you think what can the government do to ensure that the local people are more encouraged to think that they have a level playing field vis-a-vis the foreign investors?
It must get into the mind of the leadership that it is important. Then everything happens here.
That's right.
Everything happens the moment leadership gets the seriousness of the situation or the opportunity in the situation. It's not seriousness. It is the opportunity for the equity markets in India. Because amount of savings, what is $25 billion of foreigners? When we have $300 billion, $600 billion of savings, can't we put 10% of that or 5% of that which is running into $60 billion, $40 billion? The moment foreigners see that domestics are coming very strongly, they themselves will stop redeeming and they'll bring more money.
Sure.
So you have to create that counterforce. That, I mean, okay, at 8,000 DIs are not interested in buying, but at 7,000 you cannot, I mean, everything will be lapped up.
Sure.
So create that kind of a counterforce here.
One thing that you've both seen in your vast experience, with the market is, the various cycles of booms and busts. And as you said, Mr. Agarwal, the markets have still evolved and we're in a much better position now than we were possibly, even 10 years ago. But what continues to concern a retail investor, apart from some clarity, as you're saying, on taxes and so forth, is also sheer sentiment. Right, so I want that reassurance from you and as given your vast experience on how to handle some of these cycles in the market. And I mean, we've even got questions coming in. For instance, there's Shrini has written in to us on Twitter saying, do we start bottom fishing? Is there further downside? Now, I know you're not looking at the near term, but for investors who are continuously concerned, another query which says Abhijit Sen has said, are there investment mistakes you've made and how do you learn from them?
Yeah.
So how can we address some of these worries that retail investors are facing?
So, Abhay, I think the important point which we're trying to make vis-a-vis the government, that there is a need to really think towards the equity markets and the vibrancy of the market, because budget is round the corner and this is once in a year event, and this will be the most important budget of this government, because again after one year then you will start to get into the election mode. So whatever can be expected has to be done in this budget. To conclude the old thing, what I would say that if they get this, if they get it, that equity markets can actually have the potential to revise not only the sentiment but the real growth, and subsequently make changes which makes it equity as a very attractive class. Then we are talking of 60,000-70,000 crore rupees of disinvestment target not being made. Actually, it is actually is a disgrace that such a small amount of money could not be raised in last 12 months from the markets, and it has nothing to do with the government. Tell me, it has got to do with more with the sentiment. So what we are talking about, how can the government up the sentiment in this budget so that it becomes attractive? Vis-a-vis the cycles, we have been around for many, many years. I think there should not be any doubt, at least there is no doubt in my mind, that India is still, as Mr. Agarwal put it, India still remains one of the real bright spots in the world. We are still talking of growing at 7-8%, while the world is talking of deflation. So in this short term, whatever is happening around the world is definitely impacting us, because ultimately markets are all about, in the short term, all about liquidity. If the foreigners have been selling every day for last 12-18 months, obviously either there is no counter force to back that, so markets will react to that selling. But in the long run, people who are really looking to invest, and it is our experience, my experience from last 25 years, that whoever has taken advantage of situations like this and has made investment, this is volatility, this is not risk. Right. If you have taken advantage of this and you have made investment, ultimately you have come out as winners. Now this phase, will it last another 3 months? Will it last another 6 months? I don't have an answer to.
Right.
So the only thing which you can do is, don't put money at one go. Maybe invest systematically, which is why every month, whatever your saving is, you keep investing, so that whether it is little high point or low point of the market, you will keep getting advantage of it. But I would argue that equities in the long run, if you're taking really a 5-10 year investment bet, equities will still deliver one of the best returns in India.
Right, and you're saying that they have the potential to emerge as one of the most viable asset classes out there.
That's right.
Worldwide, there are only two sources of making big money. You go and see all the billionaires in the world. There are only two sources. Either they have made money in the equities or they have made money in real estate. And the real estate guys are very few.
Right. Yeah.
So bulk of, see, what is Warren Buffett? What is Bill Gates? What is this Twitter fellow or all Walmart, all the four brothers? So they're all made up of the equity market. The biggest wealth creation machine is equity markets. This market is 100 times up in 30 years. Ex-dividend, come dividend, it's up in 25 years. Do you mean to say that this country's future is worse than last 25 years? I bet it will be 10 times better. The issue is that now the question is this a buying time or selling time? One. So I'm very clear this is a buying time. Now, should you put everything today? No. I mean, obviously you have to measure, and depending on your stock and conviction and everything, and market is soft right now, and it could be softer for some more time. But is it a selling time? If I'm invested and holding a nice portfolio, I would suggest against that. This is not a selling time. This is a buying time. This is a building the portfolio building time.
So in the interest of time, Ramdevji, so because it is budget and because it is interesting times, what are the sectors and the themes which you would say are interesting from an investor perspective, which people should look at, not from a trading perspective. I'm not suggesting you suggest something for 1 month or 3 months. So if you have to take a real disproportionate bet, give me 2 or 3 themes for investors which they can look at in these markets.
So one of the biggest theme is that we have seen the collapse of commodities and oil.
That's right.
Okay, and their collapse of the order of about $10 trillion industry globally has been disrupted completely.
That's right.
So the benefit is upwards of $5-6 trillion, and yet the global GDP is positive of 3%.
Sure.
It means either it has gone to the consumers, bulk of it has gone to the consumers by way of benefit.
Sure.
And in India, almost 50%.
One of the biggest stimulus which has happened in the world.
Yeah. So,
in real sense.
Consumer has got it.
Yeah.
Government has got it. In India, almost 40-50% has been taken by government, at least in oil.
Sure.
1/3 or 40% has been given to the same. There are some companies.
Sure.
They have been able to retain some portion of the benefit.
Sure.
Say, depending on their competitive situation or brand. Say whether you saw Britannia result yesterday on 12% top line, 50% bottom line. Clearly, they have been beneficiary in packaging costs or raw material costs or wherever.
Sure.
If you look at lot of
one is the oil benefit.
Beneficiaries
oil
of oil. Beneficiary.
Sure.
So there are only if you can divide the whole commercial world in 2 parts.
Sure.
One, producer of commodities and user of commodities.
That's right.
So say like automotive, they're a huge user of all kinds of commodities.
Sure.
Okay. So they are the beneficiaries.
That's right.
So we have to position the portfolio 100% towards the users of the beneficiary, users of the commodities, because what commodity boom happened for 12 years got demolished in 15 months. So I don't think, I'm not of the votary that okay, it can reverse a little bit, but I think for next 5, 7, 10 years.
Sure.
In at least 5 years, I think this commodity story
in the commodity
will
space
continue.
is here to stay.
Is going to. So we have to.
You will have a bounce.
Yeah. So we have to buy the franchises or the businesses which are the best and the biggest.
Sure.
And who have so the quality of the machine is extremely important. What happens is, at this point of time, a lot of companies are available very cheap.
Sure.
But they're actually very expensive.
So we got it.
So you have to buy so that's one thing.
Second.
So my bulk of the positioning of the portfolio is around that.
Sure.
Okay. Then you have the Indian consumption stories.
Sure.
Which is a perennial story. I mean, the longevity of the franchises, in the sense that there are franchises, companies which are not a 5-year story, 10-year story, but it is a 25, 30, 40-year story.
That's right.
So you have to find those ideas.
Sure.
And put into your portfolio. Then you have the perennial growth stories.
But are there enough ideas in that?
You need 15 ideas.
Sure. But are there enough? Are they not expensive? The consumer franchisee companies, are they not expensive?
They are not expensive if you are a 5-year buyer.
Sure.
They are expensive. They could be expensive if you are a 6 months, 1 year guy.
Sure.
So you buy something at 2,500, it can go to 2,000.
Sure.
But 5 year henceforth, it will definitely be 10,000.
And that's good enough.
Yeah.
I think in this world, no one will be complaining if they can make their money 4 times in 5 years.
Yeah. The amount of money which you see.
The second is Indian consumption.
Yeah. Perennial Indian consumption, like housing finance.
Sure.
I mean, if you read the 2050 report, what could happen to demographics in India?
Yeah.
I mean, you cannot buy enough of mortgage companies here, well-managed mortgage companies. It can keep growing at 20% plus for next 50 years, and still you will not be able to finance all the houses.
Sure. About my own take here, sorry to intervene, that, see, government this year is in a way struggling with their finances because the nominal GDP growth rate is only roughly 8%. And in an 8% scenario, a nominal GDP, how does companies grow? And with the falling commodity prices, how do companies grow at 12, 14, 15% top line? That is very, very difficult, and that is why even your tax collection, your excise collection, ex the oil, has been a matter of discussion, debate, and concern.
Right.
So the whole question is all your numbers, fiscal deficit, this, that. How does that get met in times to come, given this structure? So what can the government do to revive the economy? I think we need to look at housing sector very, very closely, and I think they would do something because this has a huge impact on the entire economy. The moment you improve housing, your credit growth rate can take off. Your steel sector can look up, your cement sector can look up, your employment can look up. I believe that they will do or they should do something really, really significant to improve the overall housing sector, and I'm talking of more not luxury housing, I'm talking of more affordable housing. So what kind of tax incentive? Can you think a little bit out of box from saying that right now you are getting saving at 1,50,000 rupees tax concession? Can it be double or triple? And why it can't be done?
Right.
Again, what you will lose will be very nominal,
Right.
but the sentiment impact and the real impact on the economy will be very, very large.
All right.
Yeah.
On that note, we're going to take a very quick break. When we come back, we're going to continue to bring you expert advice on how to tackle the markets in these volatile times, and also what to expect from the big budget bet. Coming up next, we also have Rhythm Desai, MD at Morgan Stanley, joining us, and our expert market panel today with our guest editor, Madhusudan Kela, in conversation with Ramdev Agrawal and Rhythm Desai. Welcome back. You're watching The Budget Bet, our special conversation today with some of the biggest names in the markets to help you track your investment decisions ahead of the budget. You've already heard veteran investor Ramdev Agrawal in conversation with our guest editor today, Madhusudan Kela of Reliance Capital. And now we're also being joined by Rhythm Desai, Managing Director and Head of India Research at Morgan Stanley. Thanks so much for being with us, Rhythm. Madhu, I'm going to hand over to you because I know you're taking forward that theme.
Welcome and thank you for coming here. It's a in a way special time for India, a special time. You have a lot of expectation from the government because this seems to be the most crucial budget of this government. What is your take? What is it which you are expecting? What is it which you can tell Delhi that they should be doing? And why is it that it is important than ever before to build confidence, as we were talking, into retail investors through this budget?
Yeah, so I think, Madhu, the world is very challenged right now, which I think is what we need to overcome, because the world is not likely to get significantly better. There's a lot of debt, there's deflation, and growth is a problem. In that, India appears like an oasis. And that's expressed in the way the market has performed. We've had stellar outperformance, even this year. I mean, even though India has fallen on an absolute basis and domestic investors think that, share prices are falling, you just have to look around what's happening everywhere in the world.